etc. And it's why I make such a serious delineation between monetary maximalism and then like the technology competition. But in May of 2020 or so, I started to hear about it, look at it. It was interesting to me, etc. And the more that I dug into it, I realized I was like, this is the same argument as to Bitcoin versus gold, right? The digital version of something is always bigger than the analog version, right? So the physical version.
Is that just your gut says, or is there?
Name one asset that you can think of where the physical version is not bigger than the digital version.
I can't. And you have just put words to something that I feel, but have never had words. That feels so true to me. That's why I'm so hyped about Bitcoin and Ethereum and NFTs. Is like, dude, my brain switched over to digital so fast on artwork, I can't tell you. So there was actually, I found myself, somebody wanted to send me something, and they were like, oh, I want to send you, I forget what it was, a painting or something like that. And I, in my heart was like, oh man, if it was an NFT, I would fucking love it. But I'm like, the physical thing, thank you. That's so sweet. It's, oh my God, so kind. But go ahead and keep it. It's weird how fast that happened.
The thing, if you just go down the line, so the easy examples are shopping, all that type of stuff. Taxis. Uber, the reason why most investors missed Uber as an investment opportunity is they compared Uber to the total addressable market of the taxi industry. Well, that was actually the wrong analysis.
That's really interesting.
Because the digital version of taxis ended up actually not owning any cars. And it was a market expanding technology because it didn't just eat taxis. It didn't just eat black cars. There are millions of people in the United States who are young, who don't own a car, and they Uber everywhere. How many people in Manhattan own a car? Well, most of the young people, they just Uber everywhere, or they use public transportation, right? And so what ends up happening is the opportunity or the addressable market expanded drastically with a digital version of the analog. If you look at gold's market cap's about 10 trillion. Bitcoin today is 1 trillion. I fully believe that Bitcoin is not only going to drastically eclipse gold's market cap, but it'll be a market expanding technology. If you ask me right now how to go buy gold, I couldn't tell you.
Agreed.
I'd have to call a broker or go on a website or, and have to figure it out. I don't know how to do that. Myself and most digital natives know exactly how to buy Bitcoin. And so you look at that, now bring it to art. The art market, depending on how you count or whatever, $1 trillion or less, right? The digital art market, you just said it. OpenSea did $3 billion in transaction volume in a single month.
It's crazy.
And so why is Bitcoin better as a global store of value than gold? Why is the digital version better than the analog? Well, one, there is a digital component to it, meaning that anyone in the world with an internet connection can sign in and immediately start to transact in it. So there's an accessibility advantage. Two is there's fractionalization. I don't have to buy a full Bitcoin at $45,000, $50,000. I can buy a piece of a Bitcoin. Three is that I can carry it around really simply on my phone, right, or on my laptop rather than lugging around physical gold. So there's a portability advantage to it. And then you start to look at it from a storage cost, etc. Right? There's a whole bunch of advantages, digital version versus the physical version. What happens with the digital art? It's the same thing. More accessible, more divisible, more portable, all this type of stuff. And so if we're going to go and move our lives into this like metaverse digital world, whatever, is the new way to describe it, why would we leave the assets we care about in the analog world? No, we're going to bring them into the digital world too.
All right, I'm going to try to touch on something ephemeral to just drive this point home. Have you ever looked at a VV Vault?
VV Vault? No. Yeah. What is that?
Okay, this is so crazy. So VV is a collectibles company that's partnered with like DC, Marvel to do, but their NFTs look like actual collectibles. So it looks like a toy, it looks like a statue, like they're going out of their way to sort of literally just digitize the collectibles industry. But their brilliant move, and I'm still dazzled by this, is that they gave their users the ability to create these. They've made it right now. I'm sure future iterations won't, but it looks like a vault. So you're going through a vault door and then you're on the inside, but it's just a virtual space for you to display all the things you've collected. The level of creativity that people show in placing their items is insane. So I'll give you one example. the way that they have programmed this space. So one of the collectibles you can buy is the DeLorean from Back to the Future. Mm-hmm. And one guy put it upside down and on the roof. So it's actually outside the vault, but it plays an animation in a loop of the flux capacitor turning on, which has all this electricity, right? If you remember the movie, all the electricity sparks and then it disappears. So it does that animation. So as you walk through this guy's vault every 30 seconds, whatever, all this electricity just runs around the ceiling because he's placed his collectible. And I was like, oh my God, if I have the physical thing, you have to come into my house to see the physical collectible. B, it's not going to have electricity sparking everywhere. Yeah. It's going to zap some kid walking by. So not only now am I only bridled by my imagination, but anyone, anywhere can come and see this. And so now as a social creature that wants to connect with my community, and I'm given these virtual tools, I don't need to be wealthy, right? You no longer need a big crazy house to display all of this art. You can create this virtual thing, put all your stuff in a way that only you have done. It takes time, right? You talk about money as this equation to time. So we know we value time. So when I see somebody who's spent their time creating something like this, I'm just like, oh my God, like this is so much cooler than what collectibles have ever been ever before in history. And so I start thinking about, all right, now you're going to have companies that spring up that are making virtual galleries where the gallery itself is like this crazy physics defying piece of art. And you're not just walking through a mimicry of a traditional gallery. You're on the fucking moon. You're in outer space. You're inside the body, whatever you want. Like it is the creativity that the digital realm unleashes because you no longer have to obey the laws of physics. It's just, oh my God.
I think there's an element of like, you don't have to obey the laws of physics. You also don't have to ask permission of anybody.
Preach.
Right? So, if you go and you look at an art gallery in Manhattan, for example, how many people really got an opportunity to design the art gallery? Well, they're usually people who have some sort of pedigree. They got trained somewhere, right? There's like all these like hurdles to get in. And so it ends up being a lot of the same people who all know each other and they're the ones who do it. On the internet, imagine if you held a global competition for whoever could create the best art gallery, right? And there was like a prize for it. You'd get some really, really cool stuff because there was no barriers to become the person who could do that. That's all this is it's now just saying, but you don't have to come do it in Manhattan, like just do it on the internet. And I think that, the best analogy I have for this is think of Twitter. If I said to you, Tom, you know what you're going to do every day? You're going to go hang out in this virtual reality square and you're going to talk to random strangers. You'd be like, dude, that sounds like cool to like test one time, but like I got things to do. But what do? You go through the portal, which is your computer or your phone, and you go and you hang out in a digital square and you talk to strangers. Like that is in some weird way a version of virtual reality, right? I tweeted recently, I said, we live in virtual reality already. It doesn't look like the thing that you put, the Oculus headset on and you walk around, you can touch and feel things. And like that's like level, 2, 3, 4, 5 of virtual reality. But Twitter created virtual reality for people and you can go there and hey, every day we all come here and meet up again. Right? And you keep going. And then what am I basically doing? I'm basically walking around the square and I'm saying, okay, Tom's talking about this person's talking about this person's talking about this. And I have a choice. Do I want to butt into the conversation? Do I want to reply? Do I want to quote tweet? Do I want to say, hey, Tom just said whatever and I go and tell my friends? That's a retweet button. Like you start to think through this and it's like, yeah, this is all going to happen. How quickly does that happen? Up for debate. What technologies is it built on? Up for debate. How should an investor invest? Up for debate. How should you as a market participant who's not an investor but wants to be a user, how should you use this stuff? Up for debate. But I think that one of the trends that every great investor has figured out, or one of the activities, is just find that kind of direction that the world is moving, as be an observer, understand the world's moving this way, and then go and say, okay, well, what are people using?
To your point about observing it, to not judge it. So one of the things the NFT market has taught me is that, in fact, I wrote my rules. They were tongue in cheek when I wrote them, but I think I should publish them, is that everything you think is cool is going to go to zero and everything that you think is dumb is going to moon. And I've just seen that play out over and over and over again. It's really hard to predict what other people are going to think is cool, because it's really a moment is created. Energy is orchestrated somehow through this. It's not an invisible hand, because there are some people that are really good at it, but they can get the energy moving towards a project for whatever reason. Like, I don't know if you paid attention to what happened with Loot. So the guy that I consider my king of alpha, David, he sent me a tweet. Like, I was about to go to bed, and he was like, "Hey Tom, this thing called Loot is popping off. Look at it." I looked at it and I'm like, this is white words on a black background. This doesn't make any sense. And I was like, but I know this industry, and if people believe that this is like new, fresh, exciting, that at least for a moment, there's going to be this influx of attention. Now, that moment could be 10 years. That moment could be 10 minutes. I have no idea, but I'm getting better and better at sort of arbitraging some of these things. So I bought 2 of them. And then a couple of days later, if you owned them, you got an airdrop of basically their token. And I didn't even know about the airdrop. And the same guy, David, was like, "Hey, Tom, because you bought 2, you've been airdropped this stuff, but you actually have to go pull it out of the contract directly. And so I'll show you how to do it. So here you go into Etherscan, and this is how you do it." And I got it, and I got my 2 bags of gold. And as of that day, that thing, so I bought the ones that I bought, I can't remember if it was 1.9 ETH for the original Loots or 0.9, but it was in there somewhere. And at the time I got the gold, which, remember, I didn't even know existed. I was already making money hand over fist just on the actual squares that I bought. And the bags of their coin that my friend had to tell me were there, I went and sold one of the 2 for $50,000. And I was like, I imagine if a friend was like, "Hey dude, I know you don't know, but in your bread box in the back cupboard, a guy just left you 50 grand. You'd be like, "What just happened?" It was so surreal. And I was just like, okay, don't think about things. Think about the nature of things. And I was like, this is telling me something about the nature of humans, of creative energy, of attention, and how it can be swayed, about enthusiasm, and how it moves sort of restlessly. It never lands on one thing and stays. And so there's these really predictable curves that these projects go through. And I'm like, hold on. If you do your, 10,000, 20,000, 30,000 hours of research, and you'd like really figure this game out, obviously never invest a single dime over what you're prepared to lose, because NFTs are the single highest risk investment I've ever seen humanity come up with. I want to make that really fucking clear. But it is so interesting to see how it captures that same part of the psyche around sports betting, how we're all locked up because of what's going on with COVID. Like, there's all these factors that have come into play, and just that crypto's taking off, and NFTs have answered the question of whether there's a real thing there and whether people will value them. But once I stopped judging the market and just started saying, this is happening, whether I think it should or not, whether I think white text on a black background should be cool or not, it is. And it's capturing energy. And dude, it wasn't long ago that I made $50,000 a year. So I was like, this is so crazy. And this comes back to like my obsession. People need to do their own research. I cannot predict the future. You cannot predict the future. Who knows? This could all go to nothing tomorrow. That does not seem likely. And given what's going on today, the nature of the technology, right? Understand it, think from first principles, and it becomes far easier to do novel things. But just looking at what's going on, I legitimately want to, with all the caveats of you have to be so careful. You cannot go blindly into this. But I can think of few things that are worth people's time and energy to understand more than the blockchain. And that, if this were a baseball game, we are still in the locker room getting ready to come out onto the field. It's like, because I mean that from a technology standpoint, like even forget just that you could buy Bitcoin or Ethereum or whatever today and it will go up in value. What's going to be built on the back of the technology will create a world that will be as unrecognizable as a post-internet world would have been to me in 93 before I'd even heard of email to now. I mean, that's utterly just, it's a transformation that I could never have predicted. It's going to be the same thing. But this one's happening in full view because we already have the internet. So it's already, you and I are talking right now to, hopefully millions of people. And then on top of that, we've all seen it happen before. So you can say, hey guys, remember mobile phones? Hey guys, remember the internet? This is a big one like that. And so I think this is going to be, I'm going to make a statement and you're going to say whether I'm a fool or not. I think this will be the biggest wealth transfer ever that we've ever seen, like robber baron moment type wealth transfer. But it's not going to go to a really, really small number of people. It's going to go to whoever the fuck takes the time to learn about this and go, there's some percentage of my daily income. It doesn't like it will go to people who don't even think in net worth terms yet. Because this is, as Raoul Paul said, this is the first time in human history where the average person has been able to front run the institutions. So this is a chance for people to get $10 every paycheck, whatever, but like to get in. And now whether it just becomes sort of wealth redistributed, because so many, like the older and more established your wealth, the less likely you are to move on this quickly.
Mm-hmm. Well, you got to think too, from an investing standpoint, you've got to ask yourself, like, who are you, right? Like, what type of investor do you want to be? There's some investors who are the most risk-averse people in the world. They say, I don't want to take any risk. I'm already wealthy in many cases. I want to protect. I'm in capital preservation mode. There's a lot of people who say, no, I'm in capital accumulation mode, right? I want to go make money. I need to make money. And what you need to seek out then in most cases is asymmetry. Now, that doesn't mean that you shouldn't do, I have these like 5 principles, right? From a personal investing standpoint. You need to spend less than you make, like kind of a core principle, right? Kind of get out of debt if you're in debt. The third thing is that you have to get out of cash and you have to invest in assets. Doesn't really matter what assets, as much more so as the action of investing. You got to be super, super, super patient, right? And you got to be disciplined. And that's it. And if you do that for long periods of time, like you will make money. And the reason is because the currency underlying it all is going to be devalued. So all of these asset prices continue to go up. Stock market, every single day, it seems like it hits a new all-time high, right? It just continues to go up and up and up. But that's if you're super risk averse and you say, hey, I'm just going to buy a low-cost index fund, S&P 500, whatever. There are some people who want to take more risk and they want to look for more asymmetry. But I think that the NFT stuff, et cetera, is fascinating because there is a level of wealth that is being created, but it's not being exchanged. And so this is something that I think a lot of people, when they think about, oh, there was $3 billion that was put through a system, or that person is worth $1 billion and they made it in crypto. In many cases, what happened is not that somebody gave $1 billion of fiat currency and received $1 billion worth of digital tokens. Instead, what happened is somebody created it out of thin air. And so now all of a sudden you have all these tokens that are worth a penny and they start trading and one trades at 2 pennies. And next you know, now that market cap of the asset is now 2x, right? It's no different than companies. So for example, when Jeff Bezos starts Amazon, right? He says, hey, my company is worth X dollars. You can buy shares at, Y price. Okay. As the company accrues value based on all these valuation metrics that people have, eventually the company is worth, $1 trillion. And you're like, well, did $1 trillion get paid to you? No, I don't think Amazon's ever made $1 trillion in cash, but the equity value, which has accrued value over time, ends up being a really big opportunity. And so it's fascinating for me to watch people like, take a Jay-Z as kind of the quintessential example. You can see over the 20, 30 year period, him wake up to and understand the power of owning equity. That's something that was created out of thin air that accrues value based on a certain number of valuation metrics. And if you're the one holding the asset, you can actually drastically increase your personal net worth and the value and cash, et cetera, that you have. A lot of that's happening here as well, right? Is somebody's buying something. You bought the loot, which is, kind of this ability to play this game or participate in this community. And as more and more people wanted to participate, it became more valuable. And so it's no different than you buying a piece of real estate. More people want the real estate, and so the value goes up. Now you're buying this asset, and the value goes up because more people want it. Owning equity ends up being the greatest way to create personal wealth. Whether you're owning a cash flowing business, whether you're owning the equity of a payment system like Bitcoin by holding the actual asset itself and having financial exposure to it, you're owning the equity of real estate, of a community with NFTs, etc. it's all the same investment mechanism. Now, which ones accrue value, which ones don't, why should they accrue value, etc. If you are in a market predictor, kind of seat, sure, you can speculate based on what you think's going to happen, what you think's not going to happen. If you're in the market observer seat, you simply are saying, look, the loot game, I wasn't really into those types of computer games, etc. as a kid. My brothers and I were all playing Madden and, basically throwing the N64 controller at each other, halfway through the game right before somebody 21'd each other, right? So to me, like, that's outside of my intellectual curiosity. But as a market observer, hell yeah, that's valuable, right? There's a ton of people who want to play this. There's a ton of people who are running into it. And so do I know if the price is going to go up or down or whatever? Like, all of that is almost secondary. And frankly, I don't think anyone can predict, as much as being able to observe the fact that, I don't know. I think the GitHub repository of loot in general was one of the most positive, or was one of the most popular GitHub repositories last week.
So crazy.
On the entire internet. And again, does that mean that it's going to be worth tons of money? No. Is that a pretty good data point? There's a lot of developer activity? Yeah. Right. Are there a lot of people who are talking about it online? If you go search on, Twitter in the tech community, a whole lot of people talking about it. Again, we've seen things tons of people talked about and ended up going to zero, right? So there's no one data point is the predictor. But I think if you sit in the market observer seat and constantly remind yourself, I do not know the future, but I'm willing to observe what's happening right now, you start to understand that there's corners of the internet that think weird things are valuable. And so if you can get out of the game of, I see these things, right? And I think, I'm like, that is weird. Why would somebody buy words on a black screen? I wouldn't buy it, right? So nobody must want to buy it. Well, no, I'm an idiot if I think that, right? Because what ends up happening is, as an observer, you have the humility to understand there's millions and millions and millions of people on the internet that want to do stuff I don't want to do. Okay. So you can choose to invest or not invest or whatever, but being aware of and observing what's happening, I think, is really important. And whether it's NFTs, whether it's games, whether it's something else, you start to just wrap your head around and say, man, this technology is creating two separate revolutions. One is a monetary revolution, which is Bitcoin, and what we've talked about in terms of the fact that nobody can debase this currency. Anyone has access to it, and it has censorship-resistant payments, and it has sovereignty for those that hold it. That seems pretty valuable. $1 trillion market cap today, how big can it get? I don't know. But I think it's going to be bigger 10 years from now than it is today. Okay, I probably want to own some of that, right? That's my personal decision. The second revolution is this idea of kind of the digital realm, or the automation that it comes with all of this. And when you start to think about this, you say to yourself, man, there's a lot of people who seem to want to do this. Even if I think it's completely stupid, even if I think that it's literally the worst idea in the world, how do you argue with the market? And so I think that, there's folks who choose from like a maximalist standpoint to focus only on Bitcoin. And frankly, that's where I tend to spend most of my time, because the monetary revolution is much more intellectually stimulating for me, right? I'm intrigued by it. It's things I sit and think about all day and spend time on. But I got plenty of friends who think that's the dumbest thing in the world. They're like, dude, who cares, right? Like, look at this and pick your kind of other area to focus on. And so I think that it's really easy online to like get caught up a lot in this idea of one revolution is important and one's not, or vice versa. At the end of the day, it's, well, who's asking the question? And what we're watching here is every industry is going to be impacted by this technology.
Yes.
And so if you're into art, you should understand it, because it's coming to art, right? And likely the digital art,
everything,
music, all this stuff.
Everything.
The thing that is most fascinating to me about the entire thing, and I've been doing this now, 5, almost 6 years. In the beginning, all the legacy players wanted nothing to do with this. And a lot of my time was focused on Bitcoin, because that was really the only liquid, true asset that they would even have a conversation about. All the billionaire investors, not interested. All the big Wall Street banks, not interested. All the institutional investors, not interested. Almost to a T, the best in the world have changed their mind. They continued to get new information, and they changed their mind. And now some of them are the largest investors in the industry. And so there's a level of intelligence and intellectual humility it takes to get new information and change your mind. The people who haven't changed their mind, for the most part, not everyone, but for the most part, historically, they haven't been very good investors.
That's interesting.
And so they just have this rigid way of thinking. And regardless of the technology evolution, regardless of what happens in the market, they just have that rigid, kind of adherence to a framework. And so to me, like, that's been one of the biggest investing lessons is I talked to that guy. He wasn't like, he gave me a 12-minute meeting. He literally nice to meet you. I basically took the meeting because somebody else I know told me I should meet with you, but like, I got to go to lunch, right? To now you're a huge investor in this stuff and you're out and you're talking about it and you're explaining it to people, etc. In 2 years, what happened? Oh, you're not religious about your ideas. You're not religious about having to be right. Instead, he said, no, it reached a point where it was very obvious that the macroeconomic environment was going to continue to be crazy. People were going to want to hold this asset. I understood how it worked. And so I changed my mind. By the way, I've been an idiot if I didn't change my mind.
Yeah. The only way to live, like that to me is my core life thesis. It's like, I'm not interested in being right. I'm interested in identifying the right answer faster than anybody else.
That's
Yeah.
it.
Building your self-esteem around being right is a trap. And most people fall into it. But that's really interesting.
It's also, if you think about trends and like identifying the right answer, a lot of times if you were to go ask, like, venture capitalists have to a lot of times understand technology innovation. They also have to kind of extrapolate out really kind of parabolic type growth, etc. And the best way to do that is actually not to think about it, right? It's not to say, you know what, Airbnb is going to go from no locations to globally dominant in 5 years. It's impossible to see that world. The guy has air mattresses in his kitchen. How is he going to go become a globally dominant company? Uber has black cars driving around San Francisco. How are they going to go literally convince people not to buy cars and instead use their service? That sounds insane at the time. But what you can do is you can basically identify people who have some future vision of the world that is different, and if successful, will end up actually being incredibly valuable. So kind of different and right? And what you find is that's why venture capitalists make so many bets, is because they're building a probabilistic outcome. Okay, if I make 10 of these bets, 4 of them are actually going to work. The 4 will pay for the 6 losers. And all I need to go find is, 10 crazy people who think that they can change the world, right? Now, sure, not everyone invests that way. But what you start to realize is, rather than try to predict it yourself, finding the people who know some secret or know some, future vision of the world that they're going to go build and create ends up being a way easier way to predict the future than actually sitting there and like pontificating about, I think NFTs are going to be whatever. In January, did anyone think one NFT platform would sell $3 billion worth?
No way. Now, one thing I know that you don't predict the future, but that it's the only thing that gives me hesitation. So you're whatever, famously like 95% of your liquid assets are in Bitcoin. I'm way less than that. But my comfort, it started with, I'll just do 1%. And then I was like, well, that felt good. How about 2? And then that was 5. And now it's like, I'm pacing 10. So
about 10% right now.
That's what I'm pacing. I'll be there probably. Well, I guess if we dip really hard, then I'll race to that.
Yep.
If we don't, I'll just keep dollar cost averaging. But I already sort of planted seeds with my wife. I might be comfortable at 25%. So that I've really sort of adjusted my thinking on that. But the one thing that gives me pause is you've talked about Bitcoin is going to become the global reserve currency. I don't think that governments go down without a fight.
Yeah. So global reserve currency, first of all, is like a term that everyone talks about, but what is a global reserve currency, right? There's 2 ways to look at this. One is the legacy terminology of global reserve currency, which is the most dominant military basically puts the currency, in place and then enforces that across the world. The dollar's a pretty good way to use that as an example. Every economy has a reserve asset. the U.S. economy is based on the U.S. geographic players, right? People within the U.S. Geography. And the reserve asset is the U.S. dollar. If you go to Mexico, the Mexican economy has a reserve asset, the peso, etc. And you go through the world, this is true. There's an economy, though, that has been created. It's actually the largest economy in the world, and it doesn't have a reserve asset. It's the internet. The digital economy does not care about where you physically are. Geography does not matter. It's unhinged from the geography. What's the reserve asset of the digital economy? Well, most people would say, well, I use dollars, right? That seems to be one of the more popular ones. But that's because we live in the developed Western world. People on the internet in India don't use dollars, right? They use their local currency. And you go around the world and you see this. What happens if we all just used one currency and all the units were the same? Okay, that'd be interesting. And so the reason why I say that it is going to be a global reserve currency is I actually don't think it's nearly as competitive with the fiat currencies as people think it is. Because ultimately what happens is the digital store of value, I want to protect my assets. And so what we're moving towards is a multi-currency world, right? Right now, you and I live in a single currency world. You get paid in dollars, save in dollars, invest in dollars, and then you also pay taxes in dollars. If you want to go to somebody else's single currency world, Mexico, you have to convert your dollars to pesos to operate within the Mexican economy for the most part. Well, when you make that conversion, it's actually very difficult. You go to the bank and you try to withdraw it. It's got to be large sums. Or you go to like a currency exchanger at the airport, they rip you off, right? Like it sucks. What happens if all of a sudden the friction and the cost of transacting between currencies or the switching cost goes to zero? And now I get paid in dollars, and with a click of a button, I can change my dollars into pesos or into Bitcoin or into a digital euro, etc. Well, now the technology is the exact same. The only difference, the only competition between the currencies is at the monetary policy standpoint. They're all digital currencies. So the digital dollar, the digital peso, and Bitcoin are literally all the same technology-wise in that steady state. But there's competition at the top layer, at the monetary policy layer.
What is monetary policy?
All fiat currencies have the same monetary policy on a structure standpoint. They're all inflationary currencies, meaning that there's constantly more printed of it. It's got a variable monetary policy, meaning that it constantly changes. Sometimes they're expanding, sometimes they're contracting. But the reason why the dollar is guaranteed to lose value is because they have to continue to create more of it, right? Same with the peso, same with the euro, etc. So if you actually take all the fiat currencies and you put them in a bucket, there is a non-consensus or a different currency structure, which is Bitcoin, for example. And so if it ends up being right, it's going to be wildly valuable. It's non-consensus and right. But two is, if I'm looking to store value, if I'm trying to save, I'm not going to save in the fiat structure, regardless of the currency. It doesn't matter, dollars, euros, yen, whatever. I'm going to put it into an asset where it protects my purchasing power. And if the switching cost is zero, I now can switch back and forth very easily. So you can see a world where my employer pays me in dollars, it auto converts into Bitcoin, I sit it there, and then I got to pay my taxes in dollars. I convert back into dollars and I pay. Well, I'm saving in Bitcoin. I'm storing value in Bitcoin. What do people do? Well, historically, maybe I had to buy real estate to do that. So my employer paid me in dollars. I took the dollars, I converted it into real estate. I sat there, and then all of a sudden I needed money to pay my taxes. I could sell the real estate, get it, and pay it back. Now that's a ridiculous, order of events if I'm simply going to use it as a saving mechanism to then pay my taxes, later this year, because there's cost, there's time lapse, etc. But there's no difference between doing that with real estate or doing it with Bitcoin. It's just now all of a sudden I can do it instantaneously. I can do it with a digital asset that protects my purchasing power, and the switching cost is zero essentially. And so when we move to a multi-currency world, actually in some crazy way, the fiat currencies may become more valuable. And this is, not everyone agrees with this.
I was going to say, I'm so intrigued.
It's like the restaurant problem, right? If I put a restaurant on a intersection, it's the only restaurant. It gets, let's say, 10 people a day. If I put a restaurant across the street, many times people will say, oh, that's competition. Now that first restaurant's going to suffer. If I put a third one there, people say, oh my God, that first one's screwed. A fourth one, oh my God, the first one is out of business. In reality, what happens is all the studies show when you build density at the intersection, everyone actually gets more traffic because that becomes known as restaurant intersection. That's where all the restaurants are.
Yep.
I'm hungry. I don't know. Let's just go down there. We'll figure something out. And so actually the first one benefits from having the others move in there. There's two arguments when it comes to Bitcoin and the fiat currencies. One is that they're in direct competition with each other. Bitcoin wins, fiat currencies lose, game over, right? And in that scenario, governments absolutely do not want this to happen. The governments that embrace the technology that ends up being the winner first will drastically outperform those that are last to adopt it, right? The second one is this argument of, no, actually, a multi-currency world, all boats rise together. Now, I talked earlier about I don't want to be a market predictor. What I find right now is as technologies are being digitized, it actually increases the accessibility of them for people around the world. So take that second example. I'm in Venezuela. The Bolivar ends up getting devalued away. I know I got to get out. Really, really hard for me to get dollars. I can try it through the bank, but there's limitations. I'm worried about confiscation by the government, etc. The black market is really pricey. In terms of it could cost me a lot to actually go buy it, and it can actually be physically dangerous. So why do I want dollars? Well, there's safety in the dollar in my mind. There's stability. That's the best currency. My currency sucks. This one's great. Let me go buy this one. Okay, dollars are hard to get. I'll get gold. Well, hard to find, can be physically dangerous, could be confiscated, etc. Okay, well, what can I do on the internet? If all of a sudden I think, let's say Bitcoin's too volatile for me, I want dollars, but the dollar isn't digitized on these platforms. But China takes their currency and they create a digital currency. It's better than nothing. So what do? I buy the digital currency of China. And it's just a pure accessibility thing. So I think ultimately the incentive is that everything will be digitized, right? You'll get digital dollars, digital euro, yen, etc. And some of that will be because people believe that there's some sort of internal domestic advantage to it. But also some of it's going to be just simply the game theory of we have to digitize our currency so it's accessible to people around the world. Mm-hmm. And so we can drive more adoption, more value. But the second that everyone has digital wallets, everything becomes a currency, right? How many people say to themselves, oh, I own that piece of real estate. I need to sell it to get dollars to then go buy something. Well, what happens when I can just take the real estate and buy directly the asset? I don't have to go to the common unit of account of a dollar. All the technology is the same. The value just is different. And so you get in this really weird world where I don't know what's going to happen in the future, but you can clearly articulate 2 or 3 different versions. And in every single one of those versions, Bitcoin specifically is valuable. So Bitcoin is valuable if it goes head to head with the fiat currencies. Bitcoin is valuable if the fiat currencies benefit, and all currencies end up accruing more. And Bitcoin is valuable if all of a sudden every asset is a currency and you can interchange them freely. So from my standpoint, it was actually the least risky thing I could do personally was to buy Bitcoin. And I always say that I sit at the intersection of 2 very, very different worlds. When I talk to friends on Wall Street or these large asset managers and stuff, they're like, you are insane having 95% of your net worth in this thing. And I say, sure, but I think you're insane for having 95% of your net worth in dollars or in dollar-denominated assets, right? So we see eye to eye on insanity. It's just 2 different assets. If I go talk to particularly young people in crypto that are on the edges of innovation and really kind of pushing the pace of this new stuff, they're like, dude, you are the least risk-tolerant person I've ever met. You just hold boomer coin, right? Bitcoin doesn't do anything. And so how can it be that the same asset viewed by the youngest, most kind of forward-thinking, innovative people is seen as the most conservative, but by the oldest, most successful is seen as the most risky? It's actually probably where you want to sit, right? Is because you're taking the 2 worlds and you're kind of meeting them in the middle. And so when you ask about allocations and all stuff, I always ask people, what are you optimizing for? I basically built a Venn diagram early on, and I said, okay, what is the thing that I think is most likely to be here 100 years from now, right? My plan is to hand Bitcoin to my grandkids. Okay, so it needs to be around for 100 years. the durability of it, and also what is the thing that has a very attractive return compared to traditional assets? Bitcoin's compounded at 200% annually for a decade.
That's crazy.
Pretty crazy, right? So if it's durable and it has an attractive return compared to traditional assets, I'm going to go get a lot of that. And if I denominate my net worth in it and my life, like my financial life in it, it actually changes psychologically spending money. Because it's one thing if I say, hey, you're going to go spend a depreciating asset to buy a house or buy a car or buy whatever.
Might as well. It's going down in value anyway.
You're financially incentivized to do it, right? It's literally, it's going to lose value, so you better get rid of it. If I say to you, hey, you're going to buy something with an appreciating asset that is likely to be worth more in the future than it is today, now all of a sudden you think to yourself, well, what am I buying? Do I need it? Is it an investment? Is it going to be worth more than what this is going to be worth? You start to ask yourself some of the questions you might not have otherwise asked. And so it's one of these things where like, I've basically just thrown my hands up and I said, look, the world is changing at a rapid pace. I spend all day on this stuff and I can't keep up. It will look very different 25 years from now than it does today. And how lucky are we that we get to live here, that we're talking about it, that we see the opportunities. And you know what? You and I will make a bunch of investment decisions. Some of them will work, some of them won't. My guess is that by picking the right industry that has a massive tailwind behind it, we would have to be really, 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 really stupid and then make really, really, really stupid decisions. We probably still will be okay. Because it's like saying, oh, I invested in the internet in the 90s. I mean, you had to be an absolute idiot to not somehow, somewhere end up better off after investing in the internet than before. I think the same thing's true here. So, you can make optimizations, all that, but at the end of the day, anyone who's paying attention to this stuff, I think is going to be fine.
That is the perfect place to stop. Boys and girls, if you haven't already, be sure to subscribe. Follow this man everywhere. Tell them where they can find you.
Just on Twitter at @Pompliano or search Anthony Pompliano on YouTube.
There you go. You won't regret it. And until next time, my friends, be legendary. Take care. Peace.
I grew up in the world of what is known as macro investing. Macro investing is when you look at all the asset classes everywhere around the world. So bonds, equities, commodities, currencies, credit, all of these things. And you try and look for what is the best return you can get. Maybe that's in India, maybe it's in China, maybe it's in the US.
Anthony Pompliano, welcome to the show, man.
Absolutely. Thanks so much for having me.
Dude, I am really excited. So there's something, my audience has heard me talk about this before. I feel a moral obligation to get people to look at cryptocurrency, Bitcoin specifically. And there's a famous saying, I'm almost certain you've heard it before, which is poor people spend, the middle class save, and then the wealthy invest. And this is what's going on in cryptocurrency. To me, seems like the first time where the average person, whether you're poor, whether you're middle class, doesn't matter. You can actually front run the investor and use, whether it's Bitcoin or something else, as that investment vehicle. Talk to me about the breakdown here in the US of people that invest versus don't invest.
Yeah, so one of the easiest ways I find to talk about Bitcoin is just talking about the legacy problems and kind of what the average person does, and both from those that are successful and those also that are not successful. And so let's start with some statistics around just the United States, right? 45% of Americans hold no investable assets.
That's so crazy.
So right
what is an investable asset for people that don't know what that means?
A stock, a bond, cryptocurrency, real estate, right? All the things that are basically are not cash that you're buying because you think that they're going to appreciate in the future. And so really that 45% of folks are living paycheck to paycheck. They keep all of their wealth stored in dollars in a bank account. They tend to be, obviously not very well financially off, but also on top of that, they tend to actually not be nearly as educated about how the system works. So there's a wealth inequality gap, but there's also a very large education gap. And so,
do you think they're one and the same?
I think that the education gap actually drives most of the wealth inequality. And really it's because of the debasement of the currency.
That's interesting. So we'll get to debasement of currency in a second. I've made a statement that I expected to be more controversial than maybe it's become, which is, so I worked in the inner cities a lot. Yep. So I have seen firsthand up close intelligence be evenly distributed. So they can process raw data very quickly. Like you're hanging out with them, you're like, okay, you're poor, you come from a long line of poverty, and yet you're incredibly bright. Like, I am confused now as to why you haven't, been able to achieve escape velocity and get out of here. And then you realize that their frame of reference, the way that they think about things, is so detrimental because your behaviors ultimately are all that matter, right? You can think that Bitcoin is the greatest thing since sliced bread, but if you don't actually buy any Bitcoin, then you can't take advantage of the growth. And so I began to realize that, or hypothesize, I should say, that generational poverty is a frame of reference problem far more than it's a money problem. And that if you took that same person, so they're born on day one, they were born to parents that have, lived in the inner cities forever, they've struggled for generation after generation, and you bring them into a household where they're going to be educated around investing and, what the game is that you're talking about, that it's a system, it works in some kind of way. That way is predictable and it will reward some behaviors and it will punish other behaviors, and nothing else matters. And if you do that, they will come out just fine. And so I was like, wow, this really is a knowledge gap problem.
Yeah. I mean, think about if I told you to go play a game and I said, but I'm not going to tell you the rules, right? Be pretty hard to play the game at first, at least. Maybe you figure it out, maybe you don't, but you're obviously going to be much better equipped to play the game if I explain to you how the game works and what the rules are. And so if you think of money or finances as a game, there's really one key rule that everyone has to understand, which is the dollars will be worth less in purchasing power terms over a long period of time. That's not a negative towards the dollar. That's not a positive towards the dollar. It's just that is a fact.
And we call it inflation.
Yeah, and the system is built that way. And the economic argument for why it is built that way is because if I know that my dollars are going to lose purchasing power, meaning that today it costs me $2 to buy a loaf of bread, in 5 years it'll cost me $4 to buy a loaf of bread, I'm financially incentivized to either invest the money or to spend the money. But holding it is a losing proposition. Now, that economic theory is predicated on the fact that everyone knows the dollars are going to lose value, because what ends up happening is those 45% of Americans end up not investing the money or really spending the money. They're trying to save the money, but it is losing value. And I always go back, and I think this generational idea is really can be extrapolated even further. It's not just folks on the inner city. If you think back, I'm 33, you're in your 40s. If we go to our parents or our grandparents, for the most part, their financial advice was save, right? Spend less than you make. If you save, then you can make your way to financial security. That was actually true, specifically around our grandparents' generation, a little bit for our parents, and then for us, not so much. And so the advice that was passed down was actually predicated on a situation that no longer exists, because before 1971, there was nowhere near the debasement of the currency that there is today.
Because it was tied to gold?
That's a huge piece of it for sure, right? Which is basically the fact that when we handed over the power to print currencies, right? This is a 50-year experiment that we're in. And, again, there are some very positive impacts of being able to print currency, right? You essentially are able to devalue the currency. You can pay off future debt with kind of less valuable dollars. And there's all this economic theory that...
Really fast, I want to ground this in something I've heard you say before, which I think it was so simple. I was like, whoa. You said, if I have $100 in my bank account, and I need 150, I can't go in and edit the database and now I suddenly have $150, but the government can.
Yes.
And I was like, whoa, like when you say it like that, and it's like literally just somebody going into a spreadsheet, I was like, oh my God. And I even this is recent. So I'm very good at making money, and I have historically been very bad at investing money. Although now I've become obsessed with investing now that I'm sort of because I was just trying to get as close to my money buried in the backyard as humanly possible. And anybody thinking to rob me, I don't actually do that. So you will find $0 here at my house. But that was my mental sophistication around finance. I didn't understand it. I didn't want to understand it, quite frankly. I'd put a lot of energy into just getting good at entrepreneurship so that I could generate whatever wealth that I wanted. But